AI megatrend stocks buying levels for Q2 2020. If you've taken one message away from my articles and videos during the coronavirus bear market, then it should have been that this coronavirus stocks bear market is presenting investors with a buying opportunity of a lifetime in AI stocks. For instance, my analysis of 16th March, I wrote, remember that whilst the current spread of the coronavirus may be exponential, but so is the AI megatrend. And who do you think is going to profit from the current crisis? Amazon, Google, Facebook, that's who. I.e., a coronavirus is reinforcing the importance of the virtual online world. Number 6 on my stock list is Johnson & Johnson, which is the first outlier on my list, a secondary AI stock but a primary stock in its sector, Big Pharma, that AI will revolutionize, as I covered in my analysis in mid-2019, so I won't repeat. My Q1 buying level for Johnson & Johnson was $138, which was set against its January high of $153.5, which the corona catastrophe delivered, and on more as the price plunged to just $109. This was one of the best panic plays. They were selling, marking down a primary Big Pharma stock that was primed to capitalize on the corona catastrophe. Then it appears the market woke up and suddenly realized the magnitude of its error and duly marked the stock price higher, sending it soaring by 44% to a new all-time high. In terms of buying levels, 15% of $157 would take Johnson & Johnson down to $134 should I say, whilst the range of possibilities from $132 to $142. Though I'm inclined to stick with my original buying level of $139 as being the most probable achievable, so I expect it to show relative strength against the general market. And those were my 6 primary stocks on my AI megatrend investing list. And here are all of my updated buying levels for all of the AI stocks on my list, where I now include the 2 tech funds I mentioned during March, i.e. QQQ for US investors and PCT for the UK on the LSE. Though remember that my preference is always to invest in the underlying stocks, because the more removed one is from the underlying stocks and the greater the risk of something going wrong. For instance, funds tend to deviate to an extent against the underlying assets, usually to the downside, as happened to most funds during March sell-off. Also, there is a risk that the fund could go bust, and that they tend to invest in too many stocks, as I only agree with about half the stocks these funds are invested in. The bottom line is that you need to pay attention to what is happening to these stocks, which whilst everything else is suffering, these stocks are making and trending towards new all-time highs that should be screaming to you to listen to the AI megatrend and act accordingly. So sorry, we are extremely unlikely to be able to pick up the likes of Amazon for $1,700 again. Instead, to bite the bullet and get exposed to the AI megatrend, else you'll be regretting not buying in some months' time when the likes of Amazon is trading at $3,000. And again, this video is an excerpt from my extensive analysis that has already first been made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month as we ride the AI megatrend into the future. And ensure you're subscribed to this YouTube channel for the next video in this series, though it's not guaranteed that all of the analysis will be converted into videos. That's another reason to become a patron.